All right, guys, welcome back to another episode of the Forge Your Life podcast here with your host today, Richard Fu from richardfu.com. And today, guys, I'm excited to have this guy on the show because he is a financial mentor. He is also the founder of Financial Mentor, and he really walks people through and how to actually build that financial freedom for themselves through, not just going out and selling himself and selling his projects and his products, but he's actually showing you the real in-depth workarounds of how to actually invest in the public market so that you can actually find financial freedom. And this excites me because this is what I've always been looking for ever since I left high school. And I'm always interested to interview people talking about investing in simple terms so that everyone else can actually make their money, make more for themselves. But anyway, guys, I'm not going to steal his thunder anymore. I want you to welcome with me onto the show here today. His name is Todd Tresidder. So guys, please welcome Todd to the show. Todd, good to have you on.
Thanks for having me on the show, Richard.
Todd, I'm excited, man, like I said before. And Todd, for the people who haven't heard about you and your work, could you share a bit more about how you help people and what got you here?
Yeah, so my background is hedge fund investing, which is kind of the rocket science of investing. And then after I sold the hedge fund, I went into real estate. So at one point I had an interest in 160 apartment units, a bunch of acreage and some land and some houses and stuff, different businesses that applied to all those. Sold all that before the real estate crash. Started selling about 2005, finished selling about 2006. The crash started in 2007. And then now I'm building financialmentor.com, which is basically it's an educational website. So it was all built on the premise that you really need to separate your financial advice from the people who sell you the investment products.
Yes.
And so all I sell is investment education. I don't in wealth building education, retirement planning education, all that stuff. And my position in the market is I do the advanced stuff. So, I'm not here to talk about frugality or 10 tips to save $10 or any of the stuff that most bloggers talk about. I'm really kind of the next step. So once you've got the basics down around frugality and managing your budget and how to earn more and things like that most people talk about, then people tend to look to my site.
Awesome. And when you say it's the next level, it's not about the penny pinching, not about the saving, it's about the reinvesting of that money, right?
And everything I teach is based on research and mathematics. So it's not like it's just Todd's little conjectures or Todd's cute little viewpoints or anything. Like even if you look at like frugality and savings, it's really important, right? Because how much money it requires to have financial independence is a multiple of how much you spend. And so frugality is kind of a double down thing, because when you spend less, not only does it require less to be financially independent, but you save more of what you currently earn to get to that goal. So I'm not putting frugality down, but it also has a downside limit. It's only so far you can go and before you experience poverty consciousness. Right? So there's a limit to it, whereas there's no upside limit to income generation and maximizing the income side of the equation. So there's really two sides of the equation to produce savings. You can either increase income or you can reduce expenses. But you can play either side of the equation, and one is unlimited and the other is limited. One creates more joy and the other creates scarcity mindset, depending on the person. If you really come from a stoic mentality, a lot of people find a very satisfying life in frugality, but there's a lot of people that don't. And so it's a matter of finding what works for you. And there's not one right answer that fits all. There's a right answer that will fit you. And that's the key here, is finding what works for you.
Gotcha. And so talk us through this then, Todd. I mean, like we're talking about the next step, which is creating more income through investing, right? I mean, there's so many investment options out there right now. Right. So how do you pick the ones that you coach or walk people through at the moment, and how do you know that that's the best way for them?
Well, first of all, you've got to break it down a little bit, right? So you've got asset classes. Different asset classes have different characteristics. So 3 asset classes you build wealth with are business, real estate, and paper assets. And each asset class has different characteristics. From within there was kind of an implied assumption in your question, which I want to address, which is that investing is about finding a good investment, right? And I say that, air quotes, like a good investment. And that's a myth. There is no such thing as a good investment. That comes into how most people approach investing, which is as a product-based focus. where they're trying to find the right thing at the right time, trying to find Apple in its infancy or Google in its infancy or whatever, Microsoft when it was young company. And then, the big myth is, oh, I find that great company before it takes off and I put $10,000 in there and I'm a gazillionaire. It just doesn't work that way. And so you've got to understand investment as a process. You've got to get an actuarial valid process or something that has a positive expectancy is another way of saying it. And then you have to implement that with discipline. And so I approach it very differently. I don't have what's a good investment. I have what's a good investment process.
And I think, we're running through this really quickly here, Todd, and I love it. And I love that you're busting these myths as well. And I see that you talk about it's not just a one-time thing, right? Like you're saying, it's not just you go out and buy one stock and then you hold it and that's it. It's a discipline. And talk us through what you mean by a discipline here in terms of investing.
Well, you have to have again, I sound repetitious because I can't give the entire process. There's way too much behind it for a soundbite interview, right? And so it's not going to work to actually reveal the process, but you have to understand that there has to be, a statistically valid process is going to produce profits over time. The thing about investing that people have to become clear on is that the essence of investing is putting capital at risk into an unknowable future. And so you have to sit there and say, okay, if the future's unknowable, nobody can forecast it reliably enough to bet money on it all the time, right? Because eventually you get to be wrong. And then when you're wrong, you lose a lot. And so if the essence of investing is putting capital at risk in an unknowable future, how do you do that and profit regularly? Right? That's an interesting question. That question points you towards valid answers. And it takes you away from most of what is commonly taught because most of what's commonly taught doesn't actually work in that framework. So anyway, the most common one, buy and hold, does work. Low cost passive index does work. It is valid because in an unknowable future, it just holds through all of it. And then eventually what happens is the return stream of dividends plus economic growth overwhelms the volatility of the markets to where eventually you get a positive return. The problem with it is it's not efficient and emotionally it's not satisfying, right? Because you endure these horrific roller coaster rides up and down to get single digit returns over time. It requires the discipline of a celibate monk living in a brothel, and it's just the statistics show most people can't do it, right? The statistics show that the average investment account radically underperforms the averages. As a matter of fact, it underperforms inflation in most cases. And these are people who perceive that they're buy and hold investors, but in fact, the emotions of the market volatility overwhelm them. So anyway, it is a theoretically valid process. There are other ones that are more efficient and more emotionally satisfying. And again, that's part of what I teach, but it's too complicated for an interview.
No, totally understand, man. Totally understand. And there's this question that popped in my head, Todd, when you were talking about financial independence being a multiplier of your current lifestyle, right? And talk us through that. Talk us through like what is that multiplier for people who are sitting here like, Todd, I just want to get financial independence. I want to be financially free. I mean, how did that actually work out? What is that figure that they need to target for?
Oh, I see what you're saying. In other words, your financial freedom number is a multiple of how much you spend.
Yes. Sorry. To clarify. Yeah.
Okay, so there's a lot of rules of thumb. Okay, so I have a book called "How Much Money Do I Need to Retire," where I teach all this stuff. You get it cheap on Amazon, but it goes through it all in detail and it works it up. But in a nutshell, to answer your question, you can use simple rules of thumb like the 4% rule works out to 25 times your first year spending. Would give you an asset base. You could be more conservative, like in the current environment as we record this, which is early 2017. Assets are at record, stocks are at record overvaluations. They're in the top, 6-7% of historical valuations, and interest rates are at record lows. And so historically, you'll find that investment returns are very low from historical high periods of high valuation and low interest rates. And that would mean that you would want a more conservative number, so like a lot of people throw around the 3% rule. So that equates out to what you can call the rule of 300 or the rule of 400, which is 300 times your monthly spending or 400 times your monthly spending, depending on how conservative you want to be. So, it's an interesting rule of thumb because it says for every $1,000, you need 400 times that to support your spending, right?
Yeah.
So like if you spend, $5,000 a month, to support your lifestyle, that's $2 million.
Mm-hmm.
So they're just kind of simple rules of thumb. They're not exact. There's a better way to do it, which I teach in the book. It's a cash flow basis strategy
Mm-hmm.
where you work off your cash flows. And so that one's more secure and it's stronger. It's a little harder to achieve. But these benchmarks point reasonably accurate. I mean, they're enough for like a simple rule of thumb that we can throw in an interview and it's useful. It points true north. It's just not accurate, right?
Gotcha.
It's not dead on, but if you want to just throw it up there and work toward it, you're not that far off. It's worth doing.
Gotcha. And then this other question popped into my mind when I was reading through about yourself, Todd, is that there's a really interesting part here. It said, what was the difference between financial advice and financial coaching? And that got me thinking. I'm like, isn't it very similar? Because I guess, I'd love to get your point of view of what is the difference here between financial advice and financial coaching.
Well, no, they're as different as night and day, right?
Yeah.
I mean, obviously I feel that way. I wrote the article. You can link to it from the show notes, but basically, financial advice is financial advisors are in the business of managing the wealth you've already created, right? So, and if that's not clear to you, just go ahead and try to get the attention of a financial advisor and tell them that you make $20,000 a year and you have zero assets. Okay. And try to get them to return your call. Okay. Tell them you want to be a millionaire, right? Yep. He won't return your call, right? There's no way for him to make money off you. And whereas financial coaching is here to help you build wealth in the first place. It's not here to manage your wealth. It's here to build wealth. Another fundamental difference is financial advice is a dependent relationship. In other words, it's all about the infinite wisdom of the advisor. And you as the client, you pay this fee to access that infinite wisdom. Whereas coaching is about building, it's educational in nature. So it's about making you independent of the relationship. It's about you developing your wisdom and about you becoming completely independent, autonomous in your decision ability. And that's at the true core of what freedom is, right? You can never really be financially free if you're dependent upon somebody else to run your money.
That Todd was a piece of golden nugget right there, right?
I try to give you some sound bites, right? Some tweetables in the interview, right?
None of this all planned either, guys. It's not planned at all. And I love it. It's that, that's what freedom is. It's always about choice, right? It's about option. But you don't have a choice if you're tied into, like you say, having someone else make the financial decision for you, isn't it?
Yeah, you're not free if you're dependent. Right? You can't be dependent upon somebody else. And so ultimately, this is one of the realizations I had early in life was that ultimately, if you want financial freedom, you have to become a competent investor. And I'll take it even further. That was a little bit soft pedaling. You have to become an expert investor, right? If you're going to depend on your assets, you have to know what you're doing. And so that's, again, where this site came from, why I decided to create Financial Mentor. I had a different viewpoint on the stuff. You're seeing it already in this interview. And it works. It's worked for me. It's worked for my clients. And so, there was one point in my life where I was very standoffish about this stuff. I'd spent a lifetime building it. I knew it was really different. And so I was very concerned about being criticized for a lot of these viewpoints. And I didn't want a public form of criticism. And so I really shied away from it. One time my wife, I get in conversations and people would want to talk to me about it and I would just shy away. And one time my wife just got fed up with me, and it's just like, dude, you spent a lifetime figuring this stuff out. It totally works. You could totally help people with it. Why don't you do something with it? And that was kind of what created Financial Mentor, and I've been doing it ever since. And what I did, the funny thing was on it is I promised myself when I did it, I said, if this thing ever goes negative, if people really get it, I'll just shut it down. I'll just take it away. And it's never gone that way. I mean, people have really rallied around it. They've really gotten a lot of value from it.
Yeah, man. And I've seen that you've created a huge community around it as well. And I just love that story that you shared there about that moment where for you as a man, as a person who was scared as well, right? Afraid to put yourself out there to share what you knew that worked. And I think this is what the beautiful part about your story is, Todd, is that you actually went out and you did it and then you got it proven, right? And then because it was so far off, different from what other people were preaching out there, that you doubted yourself on whether you should share it. And
yeah, it's not mainstream, right? It's like the nail that stands out as the nail gets hammered down, So if you're going to stand out, there's some hammering to be done. But the fortunate thing is that I've taken a really positive route with it. Like I don't just run around and put down traditional financial advice. I point out what's good about it, and I point out the things that I disagree with. Because it's not all bad, right? There's some really good stuff about traditional financial advice. I don't run around and poo-poo traditional life plans. I just point out what I think is interesting, and I point out what doesn't serve you if you have certain objectives or goals in life. And so I think the key point is just being really positive and not just running around being critical about stuff. And then that way it attracts a more professional following,
Yeah, and I think it brings a sense of like unbiasedness to your side too. If you go around just trashing everyone else, then you don't make friends very quickly that way.
Well, I'd like to think it's unbiased, but the reality is everybody's biased, including me and you. We all have our biases, right? So I have my biases, but I'm candid about them. I'll tell you what they are. If you ask me in a way that pulls them out, I don't even know what they are off the top of my head, right?
Yeah.
But they're in there, and everybody has them, including me and you. So I don't want to pretend to be unbiased. That would be, nonsense. But I will support my biases with reasoning and explain why they're there and how they work for what I'm doing.
Man, I love it. And then, so, talk us through your journey, Todd. I mean, like you were, in a hedge fund, right? Investing from that end. Then what got you out of that and then started getting you into really just doing this side of things? That's a part of the story that I'm really intrigued in trying to understand more of.
Well, if it was just about wealth, I would have stayed in the hedge fund business because obviously that was the most lucrative thing. There's no way the financial education business has paid me anywhere near what the hedge fund business would have paid me. So I guess what happened is, and this happens to a lot of my clients, when you achieve financial independence, what happens is deeper values assert themselves. You can't go out and prostitute yourself for money once you don't really have to have it. Right? And that's really what the hedge fund business became. In the early years, it was really fascinating for me because I was figuring out how to invest money. And I was being paid to do the research and test out all the models and prove everything out. And it was really fascinating for me. It was like, engineering a money machine. I was like engineering it and figuring it out and proving all this stuff out. So I loved it for about 12 years or so. And then the final years that I was doing it were a little less interesting. I kind of figured it out. And I was just putting in the time as I sorted out the issues in my own life. Once I had enough money, and this happens with everybody, your willingness to tolerate goes down because you don't have to. And when you don't have to, you won't. And so a lot of people get very disturbed by it because once you achieve financial independence, you get pretty close to it. You don't actually have to have it, but as you approach it, think parts of your life that were satisfying become unsatisfying. And people find that very disturbing, but it's really not. It's a natural growth process. So you should expect it as you approach financial freedom. And so anyway, that's what happened with me, right? With the hedge fund business. It had been great for a while, but it was no longer great for the next stage of my life. I fumbled around for a while. I screwed a bunch of stuff up. I made a bunch of mistakes, some very expensive. And then eventually I started sorting out that I actually really cared about this stuff, that I was deeply fascinated by wealth strategy, personal finance, investment strategy. I find the whole thing, it's like Monopoly for kids, but with real life adults, right? And with real life stakes. It's an amazing game to me. And so I found it fascinating. I kept learning about it even when I didn't have to. I kept reading it. I was just constantly pulled to the material. And so I decided to do something with it. I decided that this is my little gift, my little freak passion, if you will, that I'm giving back to the world.
Wow, man, that's such a powerful story. And especially there's one part I'm interested here where you said, you get to a point where it's kind of like the lifestyle, right? The things that you're doing no longer give you like that passion, that feeling, right? And I forget the words that you said. Right. And I'm just,
I do too. So it's okay.
Yeah. And it's like, it's where it's no longer as great as it used to be, and
yeah, life changes, your needs change, your life just goes through cycles, and the way I picture it, let me see if I can do it on the screen here. You go through cycles and you're repeating the cycle over and over as you're in your do loop of life, right? And you break through it and you go to the next higher cycle. You'll repeat in that next higher cycle until you break through it, and then you'll go to the next one and so on. And so so like I had a life cycle in college, and I was going through the do loop, and then I graduated from college and I moved into career, and then I achieved financial freedom through the hedge fund. And then I went up into a malaise period where I was sorting out a lot of personal issues, and I broke through that. And then I moved into building out Financial Mentor. And it's just like, these are just cycles of life, and so you don't want to bemoan the changes. You want to greet them and keep moving forward, because that's growth, and that's what life is about.
Love it, Todd. Love it. And Todd, I know you got to bounce, man. And so we're going to start wrapping up the show here. And as we wrap up the show here, Todd, we're going to head into what I call the Quickfire Question rounds.
Uh-oh.
And this is the exciting part, because there's some golden nuggets that, they just come out here. And so the first question I have for you, Todd, is our signature question. It's what we call the time travel moment. And, if you could go back, Todd, to any moment in your life and speak to little Todd and give him one piece of advice that today, when would you go back to, and what would you tell him?
Well, how far back am I going?
Oh, through your lifetime, if you needed to.
Well, if I had to go back to being a kid, I'd say, hey, Todd, you're okay. You don't have to have all those self-worth issues and all the issues that I grew up with as a kid, right? Because like I'm ADD, right? And so as most ADD kids will tell you, people who are ADD, you're different from mainstream. And so there's a lot of social abuse and emotional abuse that occurs because they're trying to fit a square peg in a round hole, and you don't fit. It doesn't make you broken, doesn't make you wrong, but I can only say that as a mature man now. As a kid, it was emotionally distressing, right? So anyway, if I could go back to childhood, I would say that. If I could go back 10 years, I would say, Todd, productize your business faster, sooner. I held a lot of fear that the results I was producing, I could only produce through coaching. And I've been building out my first product now, where I teach people how to design their own wealth plan for life. Nice. And it's most of the way done now. And I would say it's better than my coaching. The results that it's producing are more powerful than the results I produced as coaching. And so I'm stunned by that. I had no idea. And the course is just like better than I ever thought it would be. And this is not a pitch for the course. I'm looking back on myself going, drop that fear. I had a big fear that held me back for years, saying I can't produce a course that's better than the coaching, but yet I can't scale the coaching. And I was stuck in a service business model for a long time. And if I could go back, I'd say, scale it now, dude. It'll be fine. That it'll come out well, because it is coming out well.
Awesome. Looking forward to seeing that. The next question I have for you, Todd, is I'm sure you've researched and read a lot of books, and I'd love to know if there was an absolute must-read book out there, what would that book be in terms of investing for you? God,
first of all, not in terms of investing. I don't have any must reads in terms of investing, because in investing, I've pulled a little bit of this, a little bit of that. When I write my book, Expectancy Investing, it'll be a must read, but I haven't written it yet. So nice bashful person I am, right?
Yeah.
So anyway, in terms of other books I think are must reads, I think Stephen Pressfield's War of Art is absolutely a brilliant work. It's timeless. It goes into principal resistance. Everybody experiences, they move their life forward. So I think that's a brilliant piece of work that everybody should connect with. Anybody that cares enough to move their life forward, you're going to need it. Everybody goes through resistance, me included. I teach this stuff and I still deal with it all the time in my own life.
Yes.
It's just part of how we're wired as humans, and you got to understand the stuff to break through it, not get stuck in it. The other one I think was really good is Essentialism by McKeown. I can never pronounce it.
Yeah, that's a really great book.
Yeah, particularly for people that live in the online world. I think it's good for everybody because we're all in the online world now. There's just limitless opportunity, limitless to-do lists. There's so much that can be done. And, how do you pare it all down? How do you break down to just the essential tasks? How do you have more life by doing less? It's a really big question, so we don't just run like hamsters on wheels. So I think that's a really good book too. So those are good starting points.
Awesome, man. We'll share that in the show notes. And a final question here for you, Todd, is, what's the best piece of advice you've ever received that still just sits in you and rings bells in you every time it just pops in?
Well, I give away a lot of advice, right? I'm a coach, right? So I'm always giving advice. There's one that comes up a lot in coaching, which is you can do anything you want in life if you care enough to commit to it and you bring in deliberate practice. So if you deliberately and methodically pursue and work toward the goal, and you do it with persistence and discipline, you can create anything, you can do anything. And so if you want to know how long it'll take you to get to the goal, just look, and this is the piece of advice that it connects to, right? If you want to know how long it'll take you to get to any goal, just look at how much time and how much money, your resources of time and money, you dedicate to the process. And that's a very telling thing. So you can look at people who achieve financial freedom fast, and glory be, look at it. They dedicated a lot of time and a lot of their money resources to achieving financial freedom, and bam, they get there quick. Look at any story and you won't find an exception to the rule, me included. And then if you want to know people that it takes a lifetime to do it, that's because they follow the conventional wisdom, and they do it passively. They dedicate a little bit of energy to it. They middle along, and they don't really get it very quick. So anyway, I think that's a really fun piece of advice that I learned many, many years ago. And it works.
Oh, thanks for sharing, Todd. Thanks for sharing. And so, Todd, as we wrap up the show here today, is there anything else you want to mention that we haven't had a chance to talk about in the show today?
No, I think, we covered some fun stuff. So hopefully everybody got some good value from it.
Yeah, it was amazing, Todd. I'm just blown away with your knowledge. And so for the people who want to connect with yourself, Todd, and learn more about your work, where's the best place they should head to?
Well, the hub of everything is financialmentor.com. That's financialmentor.com, all one word. And, that's the hub of everything. I drag around social media with me like a ball and chain. So I do have social media outlets, but I really work from the website. That's the home. That's where I'm focused. And on there, I've got one of the largest collections of financial calculators on the internet. They're all free. I give away, there's like over 1,000 printed pages of educational content on there, organized by categories. I give away a free course for anybody that wants to subscribe and follow the site. I give away a free course, 52 Weeks to Financial Freedom. And no, you won't get rich in 52 weeks, but it'll give you the entire framework for your path to financial freedom. And so you'll understand the path, and you'll have the working framework in 52 weeks. And I also give away a free book for new subscribers called 18 Essential Lessons of a Self-Made Millionaire, where I touch on a couple of things we talked about, but a lot more as well. So anyway, that's all free stuff on the site. I just give away a ton of stuff.
Awesome. We'll add that into the show notes. And so, guys, this wraps up another episode here. And I just want to say thank you, Todd, for jumping on, man. Really appreciate it.
Thank you. Thanks for having me on the show. It was good talking with you.
Yeah. So, guys, this wraps up another episode of the Forge Your Life podcast here today with your co-host and guest as well, Todd, the financial mentor. And I know this, Todd doesn't want to keep this a secret. I don't want to keep this a secret. His methods need to go out there to help more people find that financial freedom. So if you enjoyed this episode, then head on over and rate the show on iTunes so that we can get this message out there to more people around the world. And not just his message, but all the other guests here on the show as well. So head on over, give it 5 stars if you thought this was outrageous and unbelievable how this stuff could be so hidden from the world, and give us 1 star if you think I'm a traditionalist and I love traditional investing. That's fine with us. But guys, that's what I want to share here with you today. And of course, we're going to go over to richardfu.com to get the show notes as well for this episode and all the resources that Todd has shared here on the show. And of course, guys, go out there, go live with love, go smash it, and I'll see you again in the next one.